are diving deep today into what might just be the most consequential region for the future of the auto industry.
Yeah.
The Chinese new energy vehicle market.
Absolutely.
And if you follow this space at all, you know it's less of a market and more of a brutal high-stakes price war right now.
That's putting it mildly.
Survival requires speed, scale, and just almost limitless capital.
Mm-hmm.
So our mission today is to dissect a strategic move that perfectly illustrates these pressures.
Mm.
The recent massive partnership struck between China's powerful state-owned automotive giant FAW Group
Right.
and the remarkably successful, fast-growing private NEV startup Leapmotor.
And this partnership is genuinely significant. What's so fascinating here is that this is it's a rare instance of a state-owned automaker making an equity investment directly into a private sector innovator.
So it's an admission, really.
It's a clear admission by the state giant that they need that external speed, that technology, to compete.
Mm-hmm.
And they're willing to pay $500 million for it.
Which sets a whole new benchmark for how consolidation might work in China. So let's get the foundational details down. FAW acquired a 5% strategic stake in Leapmotor.
Yes, via a private placement.
A direct, targeted deal raising a massive infusion of capital, roughly $533 million.
That's right. That's the equivalent of RMB 3.74 billion. But let's just stick to that $500 million figure as we track where it's all going.
Okay, so before we dig into the strategy, let's unpack that financial structure a bit more. A private placement isn't FAW just buying shares on the open market, is it?
Exactly. No, it's a targeted strategic investment. The deal was signed on December 28th in Hangzhou, and it was facilitated by two of FAW's subsidiaries.
Okay.
You have FAW Equity, which is the investment arm that handled the actual purchase. They acquired about 74.8 million domestic shares at RMB 50.03 per share.
And that transaction is what cemented their 5% stake.
It did. It made them an official strategic shareholder, and the market loved it. Leapmotor shares immediately jumped over 4%.
That strong reaction shows a lot of confidence in the pairing. But, you know, when a company gets a $500 million injection, the immediate question is always, where is it going?
It tells you everything.
It really does. It tells you their priorities.
And it absolutely does here. Leapmotor publicly detailed the allocation, and it is a stark reflection of the technological race they're in. A massive 50% of the proceeds.
50%?
50. Over $266 million is explicitly allocated to research and development.
Wow, 50% straight to R&D. That's not just a working capital boost. That's an aggressive technology accelerator.
It is.
The remaining capital is less sexy, I suppose, but still vital, right?
Precisely. The other half is split. So 25% is dedicated to shoring up working capital and general corporate purposes, which, is essential in such a fluctuating market.
Of course.
And the final 25% is earmarked for expanding the sales and service network and enhancing brand awareness, which ties directly into their ambition for massive future growth.
This brings us to the strategic why. If Leapmotor is already a market leader in sales volume and is one of the very few profitable startups, which we'll definitely get into, why accept such a large investment from a state giant like FAW?
What's the trade-off?
Exactly. What are the risks they're trading for that capital?
And that's the core tension. Leapmotor is profitable, yes, but in China right now, profitable can be temporary. You need staggering scale to survive the price wars.
Right.
And you need rapid cash for continuous technological refreshes. FAW provides not just capital, but credibility, supply chain stability, and immediate access to scale that no startup can generate on its own.
So it's a survival strategy disguised as a growth strategy.
In a way, yes.
And on Leapmotor's side, I thought this was interesting. The sources highlighted that their CEO, Su Jiangming, had called founder control a red line in previous talks about takeovers.
Yes, and that 5% private placement stake is crucial. It gives FAW influence and it gives them integration power, but it doesn't give them control.
So the red line holds.
The red line holds. Leapmotor maintains its agility and that entrepreneurial identity, which is likely the very thing FAW wants access to, while gaining the security blanket of a state-owned enterprise. It's a very shrewd negotiation.
So they secured the capital, they held on to their independence. But to survive, they need a plan beyond just the balance sheet. What does that collaboration actually look like on the ground?
Well, this is where the deal gets really fascinating. It's not just cash. It's a commitment to shared technological development, focusing on powertrain technology that is hyper-relevant to the Chinese consumer right now.
You're talking about PHEVs and ERVs,
Exactly.
the plug-in hybrid electric vehicles and the extended range electric vehicles.
Hmm.
Why are those specific technologies the focus here?
Because they address a huge market vulnerability, range anxiety, and infrastructure gaps. Pure battery electric vehicles, or BEVs, they require massive charging infrastructure.
Which just isn't there everywhere.
Especially outside of the big Tier 1 cities, that infrastructure isn't always reliable or widespread yet. EAVs and PHEVs offer the best of both worlds.
Right.
They can run on electric for your daily commute, but they have a small backup engine to charge the battery or power the wheels on long trips. This bridge technology is gaining massive traction.
And FAW needs Leapmotor speed to capture that market.
Immediately, yes. Leapmotor offers the agile, modern engineering, and FAW offers the scale and distribution. And the partnership is formalized between Leapmotor and Kicks and Power.
Which is FAW's relevant R&D subsidiary.
Correct. They are jointly promoting co-development and production coordination of these crucial architectures. And this isn't a new concept for them. The cooperation agreement for this actually dates back to March of 2025.
Ah, so this investment just poured fuel on that existing fire.
A lot of fuel.
And what's the tangible product coming out of this? We know the pipeline is moving fast.
We do. The first jointly developed model is scheduled to debut next year, in 2026.
So very soon.
And this isn't just a local Chinese launch either. The vehicle is anticipated to immediately leverage FAW's robust overseas channels for its global rollout.
And there's that tantalizing suggestion that this new model might be tied to the high-end FAW Honky brand.
Mm-hmm.
For listeners who don't know, Honky is FAW's ultra-premium luxury mark, historically reserved for state officials. That is a massive strategic play.
It is a profound seal of approval. If Leapmotor's tech is deemed worthy of the Honky name, it instantly elevates Leapmotor's standing and consumer trust.
Absolutely.
The CEO correctly highlighted that this joint model will pioneer a new pattern of cooperation. FAW gets the speed and tech that its internal bureaucracy might slow down, and Leapmotor gets unprecedented capital, scale, and prestige. It's a masterclass in synergy.
This whole partnership feels almost inevitable when you look at Leapmotor's track record. Why did FAW choose them specifically? I mean, give us the context of the company's decade of growth.
Leapmotor's performance is frankly staggering, especially given the competition. Cumulative deliveries have already exceeded 1.2 million units. And they're hitting targets ahead of schedule. Their full year 2025 sales are expected to approach 600,000 units, but they actually hit their initial 500,000 unit goal back in November.
And the financial metrics are what truly distinguish them. In a market where most startups are just burning cash at a horrifying rate, Leapmotor has found stability.
Absolutely. They are one of only 2 Chinese EV startups after Li Auto to successfully reach net profit. They maintain that profitability through the first half and third quarter of 2025 and are expecting full-year profitability.
That discipline must have made them an incredibly attractive bet for FAW.
An extremely attractive and relatively safe bet. Plus, they've led China's new EV brand sales rankings for 9 straight months. They just know how to sell cars people want.
And they are not resting on that success. Their ambitions are enormous. They've designated 2026 as their 1 million unit breakthrough year.
That's just the short-term push. Their long-term vision is even more aggressive. 4 million annual sales within the next decade.
And to do that, they're pushing into the premium segment.
Exactly. We saw this with the D19 SUV and D99 MPV flagship models unveiled at their 10th anniversary.
Those are targeting that higher price point, around $42,000. And critically, they feature those ERE variants with large 80.3 kilowatt-hour batteries.
They are putting their new strategic advantage, that EREV tech, right into their most important future products. They are betting big on range, luxury, and that bridge technology.
But here's where the complexity deepens. All of this China-focused cash and R&D has major international implications because of Leapmotor's other crucial partner.
The European-American automotive behemoth, Stellantis.
This is a phenomenal synergy triangle. How does FAW's investment in Leapmotor affect Stellantis' global strategy?
Well, Stellantis made its own move back in 2023, acquiring a nearly 19% stake in Leapmotor. But the real structural genius was creating Leapmotor International.
The joint venture.
The joint venture. Stellantis holds a controlling 51% share in this entity, and its sole purpose is selling Leapmotor vehicles outside of China.
So Stellantis is the exclusive international distribution channel. If FAW pours $500 million into accelerating Leapmotor's R&D, which includes models like the B10, C10, and the new B05 sedan, what does that mean for Stellantis in Europe?
It means Stellantis gets a massive, almost immediate boost in competitive product without spending its own development money. They are essentially getting the benefit of FAW's capital injection and Leapmotor's technical expertise.
So it instantly expands and updates the product offering that Stellantis can market through their joint venture.
It sounds like Stellantis is enjoying an incredible amount of leverage here, just watching two massive companies, FAW and Leapmotor, work to accelerate the very products that Stellantis has the exclusive right to sell globally.
You're wrong.
If we connect this to the bigger picture, it is exactly that: leverage. Stellantis gets a steady stream of highly competitive, cost-effective models for international markets, but they also potentially gain access to the cutting-edge PHEV and ERV advancements from this new FAW partnership.
And those advancements, so crucial in China, could eventually be integrated into other Stellantis brands.
It provides a low-cost, fast-track path to hybridizing their own global portfolio. It's an incredible position to be in.
And Leapmotor is already serious about its global reach.
Oh, very serious. The sources show they have over 800 overseas sales outlets, and more than 750 of those are already located in Europe. They had global ambitions even before the FAW cash boost fully kicked in. Now their development is just dramatically accelerated.
That is a powerful story of strategic synergy. So, to summarize the key takeaway for you, the listener, this FAW Leapmotor investment is a definitive example of state-owned capital seeking out private sector agility. The state giant secured a foothold in next-gen tech and efficiency, while the successful startup gained the scale and backing for global dominance.
All while simultaneously accelerating product development for a major international partner like Stellantis.
It's incredible.
We are witnessing the birth of a complex, multi-layered global automotive structure. The traditional lines between state-owned, private, and international companies are not just blurring, they are fully overlapping in this race for EV market share.
And this new model.
This new model of cooperation, where Chinese public and private enterprises partner to accelerate technology for global export, is unprecedented. Will this become the defining blueprint for future consolidation across Asia and challenge the dominance of established Western giants? That's definitely something for you to ponder as you watch the next few years unfold.
That is absolutely a fascinating question to end on. It was an incredibly curious and interesting deep dive into a deal that has ripple effects across continents. Thank you so much for joining us for this conversation and for letting us be your guide through the source material.
Well, pleasure.
If you enjoyed this journey into the world of EVs and global strategy, please hit that subscribe button and follow the channel for more deep dives just like this one.